The Dow Jones Industrial Average, that grand old index of American industry, went on a tear today. It was a day that will be remembered for years to come, a day when the market defied all expectations and soared to new heights. The excitement was palpable. The energy on the trading floor electric. Traders, who have seen it all, were left in awe as the numbers kept climbing. A tear of joy, one might say. The kind of joy that comes from seeing hard work and strategy pay off in a big way. It was a celebration of not just numbers, but of the human spirit, resilience, and the relentless pursuit of success. It surged by a staggering 3,000 points. This wasn't just a minor uptick or a modest gain, it was a monumental leap that left analysts and investors alike scrambling to understand the forces at play. That's not just a jump, it's a leap, a bound, a veritable rocket launch into the stratosphere of financial success. Imagine a rocket breaking through the atmosphere, leaving a trail of astonishment and wonder in its wake. Never before has the Dow seen such a dramatic single-day increase. It's a record that will be talked about in financial circles for years, a benchmark against which future performances will be measured. But let's not forget its trusty sidekick, the S&P 500. Often seen as the more stable counterpart, today it showed that it too can dance with the best of them. It wasn't content to sit on the sidelines while the Dow danced the night away. No, it joined in the festivities, proving that it too has the power to surprise and delight. Oh no, it joined the party with its best performance since 2008, a year most would rather forget. But today, it gave us a reason to remember it for something positive, a beacon of hope in a sea of past turmoil. What on earth could cause such unbridled exuberance in the markets? What could drive such a phenomenal surge, leaving everyone from seasoned traders to casual investors in a state of euphoria? What magic spell, what economic elixir, what financial sorcery could be responsible? Was it a sudden influx of capital, a groundbreaking innovation, or perhaps a shift in market sentiment? The answer, my friends, lies in the realm of geopolitics, where decisions made in the corridors of power ripple out to affect markets worldwide. In the cut and thrust of international trade negotiations, where every handshake and agreement can send shockwaves through the financial world. In the very heart of the ongoing trade war between the United States and China. This complex dance of diplomacy and strategy has the power to lift markets to new heights or send them tumbling into the abyss. President Donald J. Trump, the self-proclaimed master of the art of the deal, made a move that sent shockwaves through global markets. Known for his bold and often unpredictable strategies, Trump once again demonstrated his flair for the dramatic. He announced a 90-day pause on some tariffs imposed on Chinese goods. This decision came at a critical juncture, as tensions between the two economic giants had been escalating for months. Yes, you heard that right. A pause, a ceasefire, a temporary truce in the trade war that has been rattling economies worldwide. This move was not just a simple gesture. It was a strategic play aimed at de-escalating a situation that had far-reaching implications. This unexpected turn of events, this olive branch extended across the Pacific, was greeted with a collective sigh of relief from investors. Markets, which had been on edge, suddenly found a reason to rally. The Dow, like a tightly wound spring suddenly released, shot up faster than a caffeinated squirrel. Investors who had been bracing for the worst now saw a glimmer of hope. But let's not get ahead of ourselves. While the market's reaction was overwhelmingly positive, the underlying issues that led to the trade war still remain unresolved. This tariff pause, while significant, is not a comprehensive trade deal. It's a temporary measure, a brief respite in a long and arduous battle. It's a time-out, a chance for both sides to catch their breath and see if they can hammer out a more lasting agreement. The coming months will be crucial as negotiators from both countries work tirelessly to find common ground and avoid further economic disruption. The world watches with bated breath, hoping that this pause will lead to a more stable and prosperous global economy. Only time will tell if this is the beginning of the end of the trade war or just a temporary lull in the storm. Tech stocks, those darlings of the digital age, had been especially hard hit by the trade war. The escalating tensions between the world's two largest economies had cast a long shadow over the tech sector. Companies that once seemed invincible were now grappling with the harsh realities of global trade dynamics. The uncertainty, the threat of tariffs, the spectre of a full-blown trade war had investors running for cover. It was a time of anxiety and caution, with many wondering if the golden age of tech was coming to an end. The market was a roller coaster, with wild swings that left even seasoned investors feeling queasy. The fear of the unknown was palpable, and the stakes were incredibly high. Every new headline seemed to bring fresh panic, and the once bullish sentiment had turned decidedly bearish. The tech sector, which had been the engine of growth and innovation, was now at the mercy of geopolitical forces beyond its control. But today, the sun shone brightly on Silicon Valley. The skies were clear, and there was a palpable sense of optimism in the air. It was as if the entire region had collectively exhaled, releasing the tension that had been building for months. The news of a potential trade deal had sent ripples of excitement through the tech community, and the mood was decidedly upbeat. Apple, Amazon, Microsoft, those titans of tech, saw their share prices soar like eagles on a thermal updraft. It was a sight to behold as the giants of the industry regained their footing and surged ahead. Investors who had been on edge were now celebrating, their faith in the tech sector seemingly vindicated. The numbers were staggering, with gains that defied even the most optimistic projections. The Nasdaq, home to many of these tech giants, had its second best day ever. The index, which had been battered by months of uncertainty, was now roaring back to life. It was a testament to the resilience of the tech sector and the enduring belief in its potential. The gains were broad-based, with nearly every major tech stock posting significant increases. It seems investors are betting that a trade deal, or at least a prolonged truce, will be good news for the tech sector. The prospect of stability, even if temporary, was enough to send stocks soaring. Analysts were cautiously optimistic, noting that while challenges remained, the worst might be over. The mood was one of cautious optimism, with many hoping that this was the beginning of a new chapter for the tech industry. And it wasn't just the giants who benefited. Smaller companies, those agile and innovative startups, were also riding the wave of market euphoria. These companies, often seen as the future of the tech industry, were now getting their moment in the sun. The celebrations were widespread, with teams high-fiving and toasting to their newfound success. Chip makers, software companies, even those plucky little startups daring to dream of unicorn status, all got swept up in the wave of market euphoria. The entire ecosystem, from hardware to software, was buzzing with activity. It was a reminder of the incredible potential of the tech sector and the boundless possibilities that lay ahead. For now, at least, Silicon Valley was celebrating, and the future looked bright. But amidst all the revelry, a note of caution was sounded by the bond market. Treasury yields, those barometers of investor sentiment, remained stubbornly high. Some saw this as a sign that investors are still worried about the long-term economic outlook. Are they right to be wary, or are they simply being party poopers? The bond market, like a wise old owl, often sees things that others miss. It's worth paying attention to its pronouncements, even when they seem at odds with the prevailing mood. Section 5. When in doubt, retaliate. China's response. China, never one to be outdone in the game of economic one-upmanship, responded to the US tariff pause with a countermove of its own. It announced plans to raise tariffs on certain US imports. Is this a sign that China is not serious about striking a deal, or is it simply a negotiating tactic? A way of reminding the US that it has options too. Only time will tell. The trade war, it seems, is far from over. This is just the latest chapter in a long and complex saga. Section 6. Experts weigh in, deciphering the market's mind. So, what do the experts make of all this? Well, as you might expect, they have a range of views. Some see the market surge as a sign of things to come, a harbinger of a new era of economic growth. Others are more cautious, warning that the trade war is far from over and that the market's exuberance could be short-lived. Only time will tell who's right. But one thing's for sure, it's going to be a fascinating ride. Section 7. A pause, not a truce, the trade war rumbles on. The 90-day tariff pause is a welcome reprieve, but it's not a permanent solution. The underlying issues that sparked the trade war, intellectual property rights, forced technology transfers, market access, remain unresolved. Both sides are using tariffs as leverage, trying to extract concessions from the other. It's a high-stakes game of chicken, with the global economy hanging in the balance. The outcome of this trade war will have far-reaching consequences. It will shape the future of global trade, investment, and economic power. Section 8, riding the wave. What's next for investors? So what does all this mean for investors? Should they be buying up stocks with both hands or battening down the hatches for a prolonged downturn? As always, the answer is, it depends. Investors need to carefully consider their own individual circumstances, risk tolerance, and investment goals. But one thing's for sure, the markets are likely to remain volatile in the coming months. Fasten your seatbelts, it's going to be a bumpy ride. Section 9. The global chessboard. Where do we go from here? The trade war between the US and China is just one piece of a much larger puzzle. The global geopolitical landscape is shifting rapidly. New alliances are being formed, old rivalries are resurfacing, and the balance of power is in flux. The decisions made by leaders in Washington and Beijing will have ripple effects around the world. The stakes are high, and the consequences are far-reaching. We live in interesting times, my friends. Let's hope the leaders of the world are up to the challenge. Subscribe today so that you will stay updated on the latest daily news and information. Thanks for watching.